Alright, what is going on everybody on YouTube? Griffin here, coming back to you guys with another live stream. First and foremost, if you're new to the channel, definitely consider hitting that subscribe button below. We got about 450, 460 of us here, so it's fun to just communicate with a bunch of like-minded individuals. And while you're at it, definitely consider checking out our totally free Discord group chat that's down in the description box. We've been talking about this compounding interest calculation type thing. Clint actually found us one and put it in the Discord group chat, so I'm literally after the stream going to pin it to our chat. That way it's always able to be seen. How's it going there, Josh? So I actually had the day off today. Everybody's starting to come in. How's it going, everyone? I actually had the day off today because I was not feeling too well. So, yeah, with that being said, so I just want to briefly talk about, like I put in the chat, I was just looking at VXX real quick because I actually have a position on there. As you can see, I have some alerts set just to know when to cover profits and all that good stuff, and maybe pay more closer attention to it as need be. But I want to talk about Apple. So you guys know, those of you that tuned in to, when was that stream? Sunday maybe? Or I forget exactly when I placed this trade, but I actually had a short call vertical spread, or no, it was a short put. I wish it was a short call right about now, but I had a short put vertical spread, and all that means, and we can just go back to 5 days since that's about how long it's been. So all that a short put, for anyone that's new, short put vertical spread is a bullish options play that you do whenever you think a stock's going to go up, and then a short call vertical spread means you're going to think it's going to stay at or below a certain price, so it's a more bearish assumption. And I did the bullish one, and I was actually up on that position like we were talking about in Discord. I was up roughly like $10 to $20, somewhere around like 16 or something like that, the day that I placed the trade. I forget exactly which day I placed it. It was either the 3rd or the 4th. I believe that was Tuesday, so the 4th, Tuesday the 4th, I placed that trade. I placed it pretty early on in the morning. It was the 177.50, 177.50 and 175 was the other option. So pretty much my break even was somewhere around like 177, somewhere around there, so to speak, after the credit and everything that I would get. So pretty much it needed to stay right around 177, between 177 and 178 to be safe. And of course, that has not happened. Pretty much, as I mentioned, if we zoom in here on the actual day that I placed the trade, I was actually up slightly throughout the morning. And then obviously Apple started to kind of sell off in the afternoon. And then obviously it sold off pretty massively the rest of the week. So that is just an example of a trade that went completely against me. And I just kind of want to talk about what you should do really whenever, like, what are your options whenever a trade goes this way. So obviously, number one, always cover profits if or when you can. Now, could I have? Yes, I would have made, I don't know how much percent. The trade was like roughly $200 or something, right? And I would have made 16. So I mean, it wouldn't have been a lot, but I mean, better than losing 90% of your investment, right? And I didn't do it. Why? Because I wasn't trying to use a day trade. I just used one on that Friday, so it had been like 2 days. I needed another 2 days just to clean my day trades. I like to stay well under that 3-day trade and a sliding 5-day window just to be on the safe side. So that was kind of what I was thinking. And then at the same time, I mean, the past few days, I mean, Apple had been started to kind of rebound. You can see on our 20-day, Apple had kind of just slid, and then that last week or so, Apple looked like it was finally starting to somewhat get its act together, but it hit some major resistance that we knew about right around 185, and then it got rejected once, started to push up towards it again, and got rejected. So if anything, in hindsight's always 20/20. What I would have done instead was do the short call vertical spread. I would have did like the 185 short call vertical spread, which I even considered at first, but the short put was paying more if I remember right. So instead of taking the safer route, I took the slightly more risky route for the potential premium. Keep in mind there was still almost an 80% chance of profit on this trade whenever I place it. So it goes to show that sometimes a trade just goes totally against you. 80% isn't 100%, 99% isn't 100%. Nothing's ever certain in this market, so you always need to keep that in mind first and foremost. But again, how can you go about managing this trade? One, like I said, I could have used a day trade and closed it while I was up. You're rarely going to do that because when you start to see you're up, I mean, who wants to spend a day trade on something they think long term the trade's going to, again, kind of just what I was looking at was I thought, okay, we're going to start going up. So, like I said, hindsight's always 20/20, but obviously, number one, you can just close the position. Number two, you can hold it out, which is pretty much what I did, and obviously that did not work whatsoever. If anything, I should have closed yesterday afternoon right before the bell. I would have only lost roughly like 40% on the trade. Again, some people say stop loss. I do not suggest stop loss when it comes to these advanced option strategies. Maybe for like just your calls and puts where you're just buying a call, selling, or not selling, buying a call or buying a put. Those maybe, but when it comes to like vertical spreads, iron condors, your butterflies, strangles, all that, I don't know. I'm not really big on stop loss. I'm more big on managing your position as needed. And the reason I didn't, if you're wondering, well, how come you didn't just go ahead and close it yesterday? Well, one, the range was really wide, so it's going to be super hard to even get filled at a somewhat decent price. And then number two, I mean, after just this big steep, I mean, we've literally dropped now $15, it's over $15 just in a few days, which from a percentage standpoint is what, over 10%, right? Yeah, or maybe right around 10%. A little less or a little over, something like that. But either way, after going down this much, and then it started to kind of show some signs of rebounding, I was like, okay, well, surely it's going to continue to rebound tomorrow, and then maybe, just maybe, I'll at least break even, or at the bare minimum, or not the bare minimum, like at the bare minimum, maybe break even, or maybe even get to keep all that profit. So a lot of people say don't hope whenever you're trading, but obviously, I mean, why wouldn't you have any hope at the same time? Like, it's kind of oxymoron. They're saying don't have hope, but obviously don't be hopeless. Whatever. Don't use hope when trading. Chalked up as a loss. But the last thing you could do is roll the position. Now, the only time it's really even worth rolling a position, which is why I didn't roll this position, is you want to at least be able to collect some credit still. And with this specific trade, if I was going to go ahead and roll it, it was going to end up costing me another $29 to $30. So, and my potential for profit was still only around 19-20%, rolling it out until next Friday. The expiration date was going to be December 14th, so a week from today. So, I was going to risk another $30, give up essentially another $30 just to prevent myself from losing, quote unquote losing, but at the same time, again, there's only around a 19-20% chance that was even going to work out and save me from losing what ended up being like $200. So I mean, I could see why somebody would want to roll it in that situation, but I don't want to risk, I'm essentially risking another $30 by placing that trade, if that makes sense. So it would just add to the loss. I mean, if the odds were better, if the odds were say like 60%, 70, something like that, something decent, then maybe I would have considered, but 19-20%, it just, the risk versus reward just was not there. So there are cases where rolling makes sense. There's plenty of options where rolling makes sense, and I'm sure I'll do videos about those in the future, especially as I actually run into those situations so I can show you guys real life examples. But today's just did not work out for a roll. So that trade sucked, to say the least. But live and learn, and like I said, I mean, there's just some things you can't control at the end of the day. I can't control that out of nowhere Apple, again, just continued to drop like a damn rock. I mentioned this in Discord group chat. For the entire market, I think it's starting to roll over. I'm not going to lie. I mean, we're to the point now where good news is bad news. I mean, we've kind of been this way for a few weeks, month or so, a couple months now, but we're like, everything's starting to roll over. Everything continues to get rejected as it tries to bounce back. And good news is bad news. Really bad news is good news, which it's not supposed to be that way, obviously. So I think we're definitely on the latter stages of this market. I think within the next year, maybe two at the most, I think we're finally going to see the big one finally happen. I mean, it might even be happening now. Who knows? I mean, it could continue to just drop like a rock over the next couple months, and then we'll be like, wow, the big one finally happened. So, I mean, who knows? I don't think this is the quote-unquote big one. I think it's still just a correction, but I definitely think the big one's not too far off, to say the least. I mean, look at, is this the January, February? Yeah. I mean, look how much bigger this one's been compared to February. I mean, it's, and this is just Apple, obviously. Now, if we go over to SPY, it's, that's APY, SPY. You can see it's a little choppy. It's about the same, but still, I mean, we've had, it's definitely super volatile, and we're definitely showing signs that we're in the late, very, 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 very late stages of this market. So as for my like flexible grid, just like everything that I'm kind of watching right now, EWZ, which I'll show you guys my positions here in a second. EWZ, I have a position on. VXX, I have a position on. I mentioned at the beginning of the stream. SPY I don't, Apple I don't, but you guys know that I do like to trade those from time to time, or pretty frequently. I don't have XOP in here simply because I'm trading EWZ right now, or else XOP would probably be in there. Obviously, if I wanted to, I could split this Apple window up and then put XOP over here, but it's not a big deal. I'm probably not trading XOP. Oh, where's my monitor? There we go. But I'm probably, the reason why I'm not worried about having XOP up there is just because I'm not trading it anytime too soon. It's starting to just get near territory where I don't really want to play with it, because we've pretty much broken down just about every single support, at least over the last year. Now, obviously, I can go back 3 years and start to point out, well, 29 is going to be a solid resistance. Might have some, support. Might have a little bit of support here around 30. You can see it's a pretty solid resistance for a while. And then it acted as a support briefly back in 2017. But it's just at a stage right now where I don't really want to play with it, especially with all the OPEC stuff. I want to let that get out of the way, figure out where oil is actually going to go in the coming weeks. Let's see. How's it going there, Mike? Mike Timmons? How's it going? Hanging? Yeah, hanging there. Would Iron Condors help? I don't know necessarily if Iron Condors would help, because like I kind of mentioned with the math on Iron Condors, you essentially have double the risk, double the risk, so to speak, when you think about it. Because, I mean, either way, like say you sell a call and the stock shoots to the moon. Obviously, you're going to lose money. But say you sold the call, like a short call vertical spread. Say you sold the put and then it stays and then it shoots to the moon. You'll make money no matter how high it goes. Like, you'll have that profit no matter how high it goes. But if you have the Iron Condor where you're selling both sides, you're screwed if it does either one. You're screwed if it goes all the way down, like all the way down and just drops, like obviously Apple did. And you're screwed if it shoots all the way up to the moon, like 20%, whatever the case may be, because then you're going to lose on that side too. So either way, unless if it stays in that tight range, I mean, when you're doing the Iron Condors, usually you're going to be pretty tight on your range just because of the returns you're going to want, at least like what I want. They're just a little bit more risky. They still have a good quote-unquote potential of profit, which is why I still use them by all means. I'm not saying I don't suggest using them. I've been using them a lot other than this last week or so. But when it comes to a volatile market, I don't know. Some people say, yeah. I mean, well, like I said, here's the positions I got right now. VXX is down slightly just because it's up a little bit since I placed it. Because I placed it around 39.15 or something, so I'm down a little bit on that. But yeah, Apple, man, I got crushed on that one. But like here, let's look at, let's do VXX for example, actually. So let's go ahead and do a trade, same time frame. I think these. Yeah, you could go further out too, which, like I said, I'm going to do an example right here just so we can look. So let's take a look actually at this position that I did. So I did a short call vertical spread, and I did the, what did I do? I forgot what I even hold right now. Positions. I'm doing the 40.50 and the 41.50. So, oh, I'm at 21 days. That's not what I want. Clear. here. Go. Why is it not letting me? For some reason, it's not trying to let me do what I want to do. But either way, the potential for profit, let me go ahead and clear this out. The potential for profit was like 74-75% on this specific trade that I'm holding. You can see I widened it out a little bit on the 40-50 and the 41-50. The potential for profit was like 74-75%, something like that. And the return was, I forget, maybe it'll tell me. 40, 50. I don't know how to see my exact return. I forget the exact. It's like 17. No, this one I believe was like $24 off of a $75 investment. So it's like a 25% return. I have essentially 75% chance. And again, these chances are based on if I hold it all the way till expiration. Now, by all means, am I going to hold till expiration? Maybe, maybe not. I don't know. I mean, it just depends how the trade goes, obviously. Like EWZ right now, I'm going to go ahead and keep holding it. Why? Because, like I said, one, I want to hold everything for at least a day to avoid a day trade, of course. But if a trade, like say my max profit on this one, I believe was like, because I have 2 positions in this one, the max profit is like $34 or something. So right now I'm up 4. So say I start to, say by Monday or Tuesday, I got to like up $28, $28 out of $34. I would go ahead and just take that profit, close the trade, and move on. Because if you're getting super close to your max profit, there's no point holding it till expiration. Same thing with VXX. Say it started, this one, the max profit, like I said, was like 24 or something like that. Say it got up to like, if it pretty much surpasses half of the potential for profit, I'll take the profit and move on. That's what I'm saying. Especially if the POP continues to slide. Like, see, this one's down to 61 when it was at like, what did I say, 70 something. So I mean, where's that at, by the way? I want to take a look at that. So around some resistance. So I mean, yes, there's cases where you're going to just cover the profits and move on, which is what I've definitely learned. I think I got too stuck in the mindset of looking at my potential for profit, knowing that it was based on holding till expiration, and then pretty much just locking in my head, even though it's not what I intended to do. I locked in my head, I'm going to hold this pretty much till expiration, and that's not happening anymore. But anyways, back to we're at EWZ. I guess we can just do EWZ too. So let's look at the Iron Condor. So short Iron Condor, there we go. So let's take a look at it really quick. EWZ, if I remember right, I think has a pretty tight range. It doesn't really move an awful lot, as you can see, which is why I like it too, but it still offers pretty good premiums. You have to go further on your strikes and let's return. Exactly. Yep. So we can see here on our 20-day, we're in a pretty tight range of about $41, just to be on the safe side, say $41 to about $38. So what I would do, like I said, be on the safe side, we'll go up to like $41.50, kind of like I did, and then we'll go ahead and bring this side down to 38. So you can see potential for profit there, 76. Why does it show max profit? Infinity. Sell. I wonder if it's because I'm holding a position there already. So for this case, we'll just go up to 42. So you can see there, potential for profit 68%, which I don't quite like, so I'll go ahead and push it to 37.50. But potential for profit 74%. You're never going to get that exact. You're probably, with this wide of a range, only going to get it for about 6. So after your commissions and fees, again, commissions and fees will kill you because you're adding a whole nother leg. You're adding 2 legs to the trade. So instead of it being $2, you're doubling it to 4. Your fees are going up slightly, or 54 cents. So you're only collecting $1.46 off of a $48 investment, and you only have a 74% chance of doing that. Now, if we head over to my position, maybe it'll let me do it this time. Short call vertical spread. You can see here Man, it won't let me do the exact one. Let's just go up some. So if we did just one side of this, our potential for profit went up to 89%. Now, obviously, I want to show you guys my exact trade. That kind of makes me mad. Actually, let me see if I can see it. Okay. EWZ, $10. So $10 minus $2.50, essentially around $7.50 is what I would get in a credit off of this. And the potential for profit, like I said, was between 75. It was like 75 to 80% on this specific trade. So my potential for profit went up like 5% or so, and I got to collect $6 more, essentially. Not just because of fees, but because of just how the trade worked. Generally, just like when you do your calls and puts, you're not gonna want to place a trade like you wouldn't probably buy a call up here, right? Just by looking at this range, you would think, okay, I'm probably not gonna buy a call anything above probably 39.25. I'm not gonna buy a call. And the fact that this is just flat break even right now is just beautiful. But it just goes back to thinking of the basics. You're not gonna bet more bullishly whenever it's approaching a pretty strong resistance, right? You're gonna bet a little bit more bearishly, which is why obviously on this position you would do a short call. Now, say you wanted to hop on over to something like Apple, where you see that, hey, Apple's just, and I can't lie, I was kind of tempted to hop back over to Apple. In this case, you'd do a short put vertical spread, again, a bullish position. And I would say, man, if it dropped this low, I'd be crying. But like this trade, for example, almost an 80% chance to make 30, let's just say 36 or 37. Let's just settle with 37. $37. So after your commissions and fees, over what, 15% profit, something like that. Where if we do the Iron Condor, show the Iron Condor, we'll go down to 160 and 162 again. On the upside, we'll bet a little bit more. We'll say 182.50. I don't think Apple's going to go up 12 bucks from here in the next week, do you? I don't think it's going to go down to 160. Don't think, but who knows. But just look here. We have, what, a $8 to the downside Iron Condor and a $12 side to the upside Iron Condor. We get it probably for around 50 bucks. So we have a 69% chance to make roughly 25% on our money in this case, which isn't bad. I'm not gonna lie, isn't like a bad trade necessarily, but I just don't like the trade. Whenever I look at the odds, I would rather do this trade over here because I can go a little bit further out. In this case, go down to like 160. I can go out a little bit further. 87% chance of profit, 18% higher chance of profit. My profit's going to be slightly less. I mean, what, 10%? But I'd rather collect 10, have a pretty much a 9 in 10 chance to collect 10% than a 69-70% chance to make 20-25. It's just me personally. To me, they just feel safer. It's just, that might be a psychological thing too. Who knows? But I get what you're saying though about the Iron Condors for sure. And like I said, there are cases where I still think they're a better option for sure. SPY, VXX is coming down a little bit. That's good. So yeah, pretty much the two that I'm really paying attention to are obviously the ones I'm holding positions in, VXX, EWZ. They're kind of going almost perfect for me right now. VXX, I have roughly what, $1 and $1.50 to the upside. And EWZ, I have also, what, about $2 to the upside? 41, $1.50 to $2 to the upside. So of the two, I'd be a little bit more worried about VXX in all honesty. You can see the potential for profit just wiggles a little. It was down to 61, it's back up to 64. And I mean, like I said, at the end of the day, as long as you just manage the trade, like let's say these end right where they are today. Say VXX ends at 39, let's even say 39.25, and EWZ ends at, let's just say 39.60. And then I come back Monday and they're still right around there. My profit is going to go up. My profit's going to go up thanks to theta. You can see theta in this case is 1.66. Theta in this case 0.3. Nothing major. But your profit's going to go up. Your potential for profit's also going to go up pretty drastically day by day that you continue to hold that. You can even see, I mean, it's going up just minute by minute, hour by hour, especially based on it moving in your favor. So let me check our stream really quick. We got 5 of you tuning in. Awesome stuff. And like I said, if you're new to the channel, we'd love to have you here. Definitely consider hitting that subscribe button below. Like I mentioned, we've been talking about this whole compounding interest calculator thing for a while. Clint actually found us one in our Discord group chat, and he sent it to me, and I'm going to, after we finish this stream, actually pin it to, I'll probably make a new tab called, like, I think I have a new tab actually called like rules and something like that, and I'll post it in there. I'll pin it that way. If you guys want to use that compounding interest calculator, it's awesome. From what I looked at, I didn't use it yet, but I looked over it. He just sent me it recently, and I took a look at it before I hopped on here. You can literally plug in your own numbers, plug in what you're starting with, plug in how much you plan on using, like investing each week, each month, whatever the case may be, and what your goal rate of return is per week, per month, whatever the case may be. So shout out to Clint for finding that for us. That's definitely awesome stuff for sure. And like I said, that will be in our Discord group chat, and that's also down in the description box. So we'd love to have you there. But yeah, so pretty much, like I said, the whole point of just this YouTube channel in general is just like I said, I started trading, roughly about a year ago now, and obviously there's tons of bumps and bruises and whatnot along the way, but that's running a business. I mean, when you're a trader, you're an entrepreneur essentially. So I mean, that's just business. I mean, there's times where you're gonna lose money. There's times when you're gonna make lots of money, but you want to learn from the mistakes. And that's the whole point, like I said, this YouTube channel. I want you guys to see how I adjust, how I plan to do things differently, and just keep on adjusting as I go. You guys know that the Apple was my actual first vertical spread that I actually placed, and I learned a lot from it. I mean, it's not rocket science or anything. I just couldn't look at the position, and I couldn't help the fact that all of a sudden it just had its ass fall out from underneath of it. So do safer trades. I would suggest personally when it comes to these spreads, especially for oh, you made it, awesome. With like these spreads and whatnot, especially in this volatile of a market, as you can tell, I'm moving more towards ETFs and stuff like that. EWZ, SPY, VXX. I'm really not gonna XOP too. I'm really not going to be messing with stocks too much when it comes to these vertical spreads because they move a lot more. Obviously, VXX is a little bit volatile. VXX, is that even, I don't want to be calling that wrong. Is that even an ETF? I don't think it is. Okay, it is an ETF. For some reason, I thought it was an ETN. Same difference, but still, just stocks are a lot more volatile. I mean, let's take a look. We were talking about the semiconductors. AMD down 5% today. MU should be down more. Oh, it is down 4%. Damn, I should have posted a put on that. I almost did when it was at like 36.60 this morning, but I didn't. Damn. But I mean, just stocks in general tend to be a lot more volatile. Grubhub down 4%. SQ down over 5%. That might be, now if you're gonna look at maybe doing a vertical spread or iron condor, I wouldn't do an iron condor on any stock. But if you're looking at vertical spread, I would possibly, let's take a look at it actually. But rarely, I don't really think much anymore, I'm going to be doing vertical spreads on stocks, just because they're so volatile. But just for shits and giggles, let's take a look at the short put vertical spread. I would go out to only 62. Whew. What the hell? There we go. Alright. So, for SQ, it says that only has like a 65% chance. So that one's 70% chance of profit. How low do they think SQ's going? I mean, I can see why with it going down to 55. But see, there's just so much uncertainty around stocks where ETFs, I mean, XOP, this is a big move for XOP, up 2%. Like, that scene is a big move. SPY, obviously one that doesn't, I mean, it's been pretty volatile lately, but I mean, down 1%. What's the other ones? I mean, you could even go to stuff like Drip and Gush if you wanted to. Drip and Gush are a lot more volatile. They're the other two oil ETFs that you can trade. And then EWZ, obviously the iShares Brazil ETF. This one is really not all that volatile in all honesty. I mean, if you look at the 180 day even, I mean, you can see it's just kind of been in this $30 to $45 range lately. So ETFs are kind of just what I go to, especially when it comes to uncertainty, and there's a lot of uncertainty right now. So that's one of my biggest takeaways, is mostly stick with ETFs, especially in an uncertain market. And when you're up at all, cover the position. I mean, have a target, pretty much have a target enter exit. Know when you plan on entering a position, and know when you plan on exiting. Say, like I keep going back to the positions I have right now. So I know that this EWZ position has a potential to give me how much? There was a way. How did I get to see that? Activity. There it is. So the EWZ has a potential per each one. So $10 each one, $20. Obviously that's before your commissions and everything. It was like, what I say, $7.50, something like that. So I know for each, let's just say $15, because there's two, $7.50 times 2, 15. I know this has a potential to give me roughly $15. So if it gets up to, say, you need to have a plan exit strategy. If your plan is, I want to be able to at least get 50% of this profit, then at what, $7, $8, I'd get out. But in this case, I want to get 66%. So if I can get at least 10 out of $15, then I'll go ahead and close the position, I'll collect my profits, and I'll move on to the next trade. Unless if, of course, the trade continues to go in my favor, then by all means hold it as long as you can until you reach max profit. If you get within like $1 of max profit, and I don't care how far out you are, if you're 3 days out, if you're 1 week out, if you get within like just dollars, like a % or 2 of your max profit, you'd be a fool not to just take that money and run, is kind of what I'm saying. Just have a planned exit strategy whenever you're entering a trade, and then obviously be ready to adjust when needed if a stock or ETF starts to break down supports and all that stuff, like EWZ. If I see, go back to the 20-day, if I see that it breaks below, or not below, if I saw that it looks like it's going to push through $40, then yeah, obviously I'll go ahead, close the position, and then move on. Just be ready to adjust when needed, is just what I'm saying. So with that being said, if there's no questions or anything, I'll probably go ahead and get ready to just wrap this stream up. I just wanted to hop on here because I know, one, it's been a while actually since I did a live stream, uploaded a video or anything. So I wanted to hop on here and just chat with you guys and give you guys just an overall update on that horrible vertical spread that I traded with Apple. Learned a lot, obviously, from that first trade. It's all about learning. If you do not learn from your mistakes, you're always bound to repeat them, right? So that'll be interesting to see, again, how how I adapt to that I think it's definitely going to end up working out for the better. But I will definitely keep you guys posted. Like I said, I got Adobe Premiere downloaded to my new laptop, but for some reason it's not exporting my videos, or else I would have had a video out yesterday for you guys. So hopefully I can get that all situated and figured out for you guys, and I can have a video upload possibly tonight or tomorrow. And then of course we will have our Sunday stock watch, so be sure to set your, I was going to say alarm, but I forget, there's the little bell icon down there by the subscribe button. If you haven't already, you can go ahead and hit both of those, subscribe and hit that bell icon, so you'll be notified whenever we go live. That way, if you have any questions, ticker symbols, or anything like that, you will be sure to hop in there and shout them out. But yeah, like I said, I'll just go ahead and wrap this video up. I want to thank all of you for tuning in. And like I said, if we can get to 500 subscribers before the end of the year, which is just, what, about 3 weeks, 3.5 weeks out, I'm going to do a live stream and pick one person to send 3 awesome books: Robert Kiyosaki's Rich Dad, Poor Dad, The Millionaire Booklet by Grant Cardone, and Crushing It by Gary Vaynerchuk. All 3 were awesome books that I've read, and I'm by no means like a major reader. I like to read books that actually add value to my life, will help me get richer, and I think those books, even if you're not a reader, I mean, you will want to keep reading for sure. So definitely consider subscribing, and feel free to share the video with any of your friends, coworkers, anything like that. Oh yeah, sure thing. Yeah, but like I said, that's it for this stream. If you liked it, definitely make sure to smash that like button too. But until next time, guys, keep on going out there making those profits, covering your profits, and achieving some financial freedom this year. And I'll see you guys, like I said, hopefully I'll be able to get that video uploaded for you guys tonight or tomorrow, and then I'll see you guys again for Sunday Stock Watch. Take it easy, team.